Alright, so I wanted to take a much deeper dive into IDXG, which was a ticker that a lot of people commented, like, how do I randomly see these things? Such low volume, so illiquid. How do I catch them, when they move? And how the heck was I even watching it? Uh, I want to take a deeper dive, give some insight, and kind of show behind the scenes that it's not as perfect as people think. Um, there are more trades that go on behind the scenes, and there's definitely more to explain. So I would like to do that. We're gonna go ahead and zoom out. This is the multi-month. I want to say that IDXG had a reverse split. After reverse splits, it seems like volatility increases. That can be to the downside or the upside, but I like watching them. I was watching it because it had this formation on the multi-week, which is some of my favorite TA. I love it, it's just some of my favorite consolidation. You're just getting a symmetric triangle with higher lows. On this day right here, it actually came out with a PR. And that broke out of the triangle and tried to do a $9 breakout, which could have led to explosive upside. It failed that day, and I actually did take a loss on that. So it's not like these plays are perfect, they get me too. For the most part, these are bad companies that do splits, and they are quite pumpy, and I would say you do have to be careful with these, but that's trading in general. That's trading in general. If it's a good company or a bad company, if you're day trading, there's always risk. I don't care what the setup is or what the company is. There's always going to be risk. So I'm willing to play anything. If I think that the risk reward is there, I'll play it. That's just my motto. And yeah, so I'll play anything. Alright, so why was I watching it? I was watching because it was a split. When it's a split, I put it on my watch list. I watched it for weeks. It developed the way I like. Even though it fell this day, I do want to point out that it pulled back and held support. And what do we see here? You see a channel, okay? This is a consolidation channel. It's a consolidation channel above the upside. Or I'm sorry, above the breakout. A consolidation channel above the breakout, just slowly climbing. Okay, this suggests that it's going to start breaking out harder. So again, I will say, how did I catch this? How did I catch this upside? Okay, this is not something that I found on the daily. Okay, this is something I've been watching for weeks. Okay, I have been watching this for weeks. This isn't random. This isn't just off of a new high scanner. Okay, this is something I've been preparing for a very long time. So I just want to make that very clear. Now for the day itself, I need to get a little bit more specific with some of these trades, because this isn't an exact science, and I didn't know when this thing would start surging or how, right? I didn't know, but I was willing to try. So let's pull up some of these trades that I didn't really show because it's a lot of work to show all these trades on Twitter. So let's get into it. So I bought 300 shares at 9.33. The price 9.33 at 11.05. I was looking for a surge to test 950 because it was breaking out of the morning range. Well, what's the morning range? Let's draw a horizontal line. Alright, so you got 908 by 925. So, you are climbing down the rabbit hole with me. Because I can hardly believe I play stuff like this, but I do, and it's crazy, right? It's crazy. This is the most microscopic, zoomed in that you could possibly get. A play that is so illiquid, and print rate is so poor, and volume is so poor. But even though it looks like this, there is still a way that you can trade it. And I works for me. I wouldn't really recommend it to anybody else. I can't explain it, but it works for me. So these are just some of the plays that I like to take. I call them stab plays. They're plays with good risk reward that if they work, I could bank, but they have a very high percent rate of me cutting for a small win or break even. I'm usually pretty good at avoiding losses completely with these, which I'm surprised, but somehow I manage it. And yeah, so 933, I cut at 937 because it just didn't surge. And yeah, a lot of these entries and exits are based on level 2 development type things that don't even show up on the chart. It's just things that occur on level 2 that I see that I like. I go for it. It's slow, doesn't work, I cut. I don't mess around with these. If they don't do exactly what I want them to do, I just cut. Okay, so that's one trade. Next trade I took, it bottomed and kind of held and bounced up and started to break out again with some good volume. Good volume relative to the day. Now, obviously the whole day is low volume, not really ideal, but for the day it was pretty good volume, and level 2 support impressed me. So I bought 300 shares at 949. Level 2 support got stronger. I added 300 shares at 950, thinking we could get a very fast, powerful surge to test $10 a share. However, it got to 957 and then kind of just chilled out, and then some resistance came in on the ask, and I got out because then I knew I was wrong. Hey, this isn't the right time. I mistimed it. Let's get out and reevaluate later. So I got out at 951. Again, no damage done. I took my shot. I was wrong. I quickly came to a realization that I was wrong, and I correctly cut. Okay, now I didn't play this until way later, which is the play that I highlighted on Twitter. The people were saying like, "Oh, how did you nail that? How did you know?" Well, I took 2 shots earlier that didn't really work. So the easy answer is I had no idea, right? I didn't know this was gonna work this time. I was just willing to take it again because I still believed, based on my long-term chart analysis, that the risk reward was proper. And so I just set up again. Okay, it held range. It actually held 940 all afternoon for 2 hours, right? That's impressive to me. That shows that it can hold its gains, and that if it does try again, it might finally find the upside that I'm looking for. So I go ahead and buy 500 shares. See, I'm sizing up a bit more this time because the development allowed me to. There was more support, more volume, okay? This allowed me to size up. It allowed me to take 500 shares at 947 and 500 shares at 957, okay? Or I'm sorry, 954. Okay, so 947 and 954. I was able to take 1,000 shares total because the level 2 developed in a way that allowed me to take 1,000 shares without having any additional risk. That's really important. I finally get some momentum. It looks good. It's holding. I'm wait patiently. Get a nice surge. I do notice there's a big wall at 10. And here I am sitting with 1,000 shares. I had a rough day this day. It was very choppy morning, really break-even trading from me, and I had a headache. I was worn out. And so when I'm up about $500, hey, you know what? I lock it in. There's a sitting bid At 9.95, there's a big wall at 10. I say, you know what? I'm not even gonna wait to see if 10 breaks out, and I just sell into 9.95. So I lock up the $500 win. Okay, something that I don't show afterwards is I re-entered on the $10 breakout because again, I just like the risk reward. It developed higher lows into a $10 breakout. I bought in, got 10.03 fill, and you know, it just doesn't surge right away. So what do? I cut because I say, you know what? I'm gonna look at this tomorrow. There's not that much time left, and I don't want to swing it, so I just cut. I get out of the way at 10.06. No harm, no foul. It's all good. Now it does actually hold, and then makes a nice surge into close with very low volume. Really, the volume was at 10.23, and then this was like 100 shares. They got it to 10.38, so I don't regret not swinging it. That it wasn't part of my plan. I could care less, right? Like, I could care less that it gapped up and was trading in 10.50 the next morning. Okay, that wasn't part of my plan. I do not swing high-risk tickers. I do not care. Okay, if I leave some money on the table to protect my overall capital investment. Alright, so the next day, okay, again, I'm showing these trades to emphasize that I'm not perfect, right? My trades are not perfect. There are situations where I'm going to be wrong, and that's perfectly okay. Okay, so I take trades up. I took, find them. Okay, so I bought 500 shares at 10.59. Okay, so I bought 500 shares at 10.59. I do get a nice pop, but the momentum isn't there. Level 2 looks weak. And then level 2 suggests that we're going to get a sell-off. So I go ahead and cut. So I took 10.60 and I got out at 10.74. I would consider that a failed play. But it's okay. I was able to cut for a profit on something I considered to be a failed play. Once you know you're wrong, cut. It's okay. And then I took 500 shares at 10.65 right here. I got a nice surge. We tested the $11 breakout. If we did get $11 breakout, I was looking for, I don't know, 11.20s, maybe 11.40s. Depends, again, it just depends where the momentum takes it, and if I feel like the level 2 is developing in a way that is very bullish or weak. In this case, it tests 11, gets knocked back down, all of a sudden the ask actually starts to get weighted and starts to feel heavy. And at that point, I go, well, I think that I'm wrong. I don't think that there's that much upside here, so I'm going to cut. I get out at 10.84. I make about $100 on that, and again, I would consider it a failed play. You know, like if I'm looking at a reverse split play, super illiquid, low float, okay, I'm not going for these small moves. Like, I want an explosive multi-dollar move. I just made a video on TWMC. You can see that exploded $4 or $5 a share. Okay, this is what these split plays are capable of. So yeah, I made some trades on IDXG. It worked out. I made some money, but honestly, I was looking for a multi-dollar move to like $13 a share. But at the end of the day, I was wrong. The momentum is not there, and it's not ready to make a move like that yet. So instead of hanging around, holding and hoping, I was able to analyze the situation correctly, cut my trades before they went red on me, protected myself, still made some money, and now I can just keep watching it for days to come and see if it develops again. You know, it's all good. So to end off, I do have to say I don't recommend this type of play for everybody. Look, this type of play, You need a lot of experience to be able to play this and manage your risk and not get burned. I don't recommend anybody play this. I really don't. This is something that I like to play that for the most part, I don't think anybody else should play. It's so risky, it's so crazy. I don't even know why I play it myself, but I do. I do. I like it. All I can really say about it. Anyways, I hope that the insight and the behind the scenes look with some trades that didn't work, or even some trades that did work that just didn't have nearly as much upside as I wanted them to have. I hope that the insight is helpful in kind of understanding why I take the trades I take and how I'm able to catch random surges. It's because I take stabs. I try things, and if they don't work, I cut quick, and then at later times in the day, I'm willing to take another stab, and that time it might work. So it's just a stab approach, guys. You know, good risk reward ratios, low win rate, but it does produce profit because the risk reward is good enough. So that's going to end the recap. I appreciate everybody watching, and I will see you on the next one.